Hi everyone, welcome to BISP Solutions. Today under Oracle Tax Reporting Cloud Services, we are going to discuss about the interim provision. So we'll now move on to the application. In the application, we have a specific cluster for interim provision, which gets enabled when we select the enabled feature from the configuration. So we'll go to the configuration, and from enable features, we have an option of interim provision, so that the application can accommodate this particular feature in the application. So under interim provision, we have a package forecast. So we just open the forecast package. And within the package forecast, we have the current provision uh, data form, whereby we have the actual data stored as well as the interim provision forecast data. So we'll just select the scenario as interim provision. So basically what we have to do in the interim provision case is that we or the organization or the client has the forecasted or the budgeted data for the entire year. Say in case I select P3 here instead of P6. So we can assume, or what the organizations do is that they have the actual data for until P3. So the automated data which is rolling up in the net income before tax and the corresponding provision related to that particular movement is the actual data. And then what the organizations can do that for the remaining 9 periods, that is 12 minus 3, the remaining 9 periods, we can manually enter the estimated or the forecasted data here. So what it will do is that in the period 3 only, we will have the interim provision uh, forecasted data for the entire year. So the 9 period data would be the forecasted data, and the first 3 periods data would or could be the actual data in the application. So once the interim provision forecast data for the entire year has been entered in the current provision data form with scenario as interim provision. Say, for example, we are doing this for P3, can also be done for P6, P9, and P12 would be of no use in this particular case because we will have the actual data for the entire 12 month period, 12 months uh, once the P12 is reached. So this has to be done within the year. So it can be done either monthly or it can be done half yearly or quarterly. So we are taking the case of quarter provision calculation. So what we need is that we need a rate, which is the ETR rate or the effective tax rate for the entire year, on which we have to calculate the provision for the current quarter. So we have the actual data for the current quarter, which is the first quarter, or we can see period 1, 2, and 3. And we want to get the effective tax rate, which represents the entire year uh, tax rate, and which is then a so uh, now we have the current year tax rate, which is the actual rate for the year, and we will calculate the interim provision basis the effective tax rate. So first, what we will do is that we will uh, go to the ETR forecast and see how the effective tax rate for the interim provision forecast has been created here. So in spite my tax rate being 21%, my consolidated ETR for the interim provision forecast for P3 is 24.06% because of the temporary and permanent differences which were incorporated in the interim current provision forecast. And then on the basis of this particular tax rate, which is 24.06, we can go to the interim card, and in the interim card, we then have the actual scenario whereby I have the actual data for P3, and my tax is automatically pulled from the interim provision forecast scenario that was 24.26%. And then my tax, which is the interim provision taxation, has been calculated on the basis of this particular annualized estimated effective tax rate. So this is known as the automated annualized estimated effective tax rate, which is directly pulled from the interim provision forecast scenario to the actual scenario, and then the actual data, which is pulled through the tax automation rules for the P3 period or for the first quarter. The tax gets calculated, or the interim provision gets calculated on that particular amount. So this is the interim provision, which we can calculate for either for quarterly or for half yearly or monthly as well. We can do that. But what we'll have to do is that first we'll have to get the forecasted data other than the actual data as well. So we'll have, say we have an actual data of period 1. So we'll have to get the forecasted data for the next 11 periods, or we have the actual data for the first quarter. So we need to get the forecasted data for the rest the remaining 3 quarters. And then on the basis of that, the application will automatically consider the consolidated effective tax rate. And basis that, on the actual amount, this particular annualized estimated effective tax rate will get applied and the interim provision will get calculated. One more point to keep note here is that the loss entity forecast is also there. So this provision which we have calculated at the entity level and not at the parent level or the consolidated level. So in case, so because we'll have to calculate the tax at the consolidated level as well. So what we can do here in this particular data form for loss entities forecast is that we can eliminate the entities which have a loss for the period or for the first 3 periods. So in my case, Vision CFC and Vision Italy, we are having a loss till P3 in these 2 entities. So what we need to do is that we need to just click on yes here. So there is a drop down, there's a smart list here. So we just click on yes, select yes. So what it will do is that it will not calculate the effective tax rate for these 2 entities when we are doing the consolidation, or we are performing it at the console level. So yeah, so this can also be done. We just have to click on yes, and we can ignore the loss entities here. Similarly, we'll just take a look at P6 and what we have done here. So we can easily copy the configurations of the tax automation rules and tax rates from actual to interim, whatever you want. So that's not an issue. We can go to configuration and easily copy the configurations. So again, we are looking at P6. So for P6, I have a net income before tax of 15452,873. So this is my actual figure, and the estimated or the forecasted figure for the remaining 6 periods in the year is this much. So the total comes to 355,02873. And then we have the perms and temps. We can also estimate the perms and temps for the remaining 6 periods. The tax rate is same, that is 21%. So on the basis of this, we have the interim tax calculated at the current tax rates. Then we can simply go to ETR forecast. So in the forecast, we will have the estimated tax rate or the effective tax rate, which is 24.29% for P6. And then we can just go to the interim provision. And in the interim provision, we have the interim detail card. So we'll go there, and it has the scenario option only as actual. So we have the actual profit, that is 15452,873 for the first 6 periods, and we can, or the application will automatically pick the annualized estimated effective tax rate, and the tax will then, or the interim provision will then get calculated on this particular amount basis the first 6 periods profit. So we just again cross check it. So we have 1452873, and we have the tax rate as 24.52%. So we have a profit of 3789. Uh, so there will be some rounding of adjustments, and this will get tallied then. And one more thing is that we have a separate column for the deferred taxes. So the deferred taxes also will get calculated separately in this particular case scenario. And any other discrete items. So this is the tax expense before any discrete items. In case we have any discrete items such as uncertain tax positions or RT adjustments or audit adjustments, we can just add them, and the same will get calculated accordingly. So yeah, that's it for interim provision. So it can be very helpful in case we are calculating or we are closing the books of accounts for the quarter or the month end. So we can just have the forecasted data, and we can, or the app and the application can easily calculate the annualized estimated effective tax rate. So once that is done, we will be able to get the interim provision on the basis of the annualized estimated effective tax rate for the correct provisioning for the closing. So that's it for today. Thanks for watching. And in case of any queries, you can connect with us through bispsolutions.com.